Our first guest this morning has been forecasting a U.S. economic meltdown since 2005. Joining us now is Marc Faber, Managing Director of Marc Faber Limited and editor and publisher of the Gloom, Boom and Doom Report. He comes to us from Singapore this morning. Marc, good morning.
Yes, good morning to you. How are you?
I'm doing well. Investors seem pretty happy this morning, Marc. We've got quite a rally going on around the globe. What do you make of this reaction? Should investors be relieved, do you think?
I find it quite ironic that they are very happy, because even if the market rallied here 20%, we would be at the same level than a week ago. So there's a long way to go until people and investors will recover their losses.
And good to point out that perspective, because we've certainly been talking about the Dow and the S&P were off about 40% from the record we hit last October. It's going to take some time, in your view, to gain back all that ground?
Well, I'm not even sure that we should be talking about gaining back all that ground. Maybe for many years to come, we'll trade at lower valuations than we had at the peak in 2007. I mean, I've seen many markets say here in Asia we are now lower than we were 10 years ago in '97. So sometimes it just takes a very long time until you go back and recover fully.
You know, Marc, what happened to all the concerns last week? You know, the focus kind of shifted to the economy, the global economy. Everybody said, despite the credit crisis and how this plays out, we still got to worry about what's going on in the economy. I mean, that worry's still out there, correct?
Yes, I think the next shoe to drop is more in the real economy, in corporate profits, in commercial real estate. And I would say, if you look at Mr. Bernanke and Mr. Paulson, they managed to create a bubble in all kinds of assets. Everything has been inflated. And one asset class after another has now gone down, except for one. And these are U.S. government bonds. And I think that's the last shoe to drop. Because with all the credit now being shifted to the government, obviously, as far as the eye can see, the budget deficit in the U.S. will be in excess of $1 trillion. And that will cause some funding problems, in my opinion.
Brennan, just talking about treasuries, you did say treasuries would be the last shoe to drop. So how do you expect this to play out, then, in your view?
Well, I think that is going to be a big problem, because one of the problems we had recently was that spreads have widened considerably. And I think as a result of the bailout plans, spreads will probably narrow somewhat, they will come down. But if at the same time interest rates on treasuries rise, then overall funding costs will not go down very much, and the availability of credit will not be there. So overall, I think a global economic slump is actually unavoidable. The only question is it going to be a slump with a deflationary bias or deflation altogether? Or is it going to be a slump amidst inflation? In other words, a bad period of stagflation. That is very difficult to tell, because also the concept of inflation and deflation is difficult to define. You could have deflation in some sectors of the economy, like in asset markets, but still inflation in consumer prices.
So I haven't heard you use the word bubble when it comes to treasuries. We were kind of all talking about this in the break. I mean, are you saying that treasuries are the next bubble about to burst?
Well, I think from a longer-term perspective, let's say the 30-year U.S. Treasury is yielding, say, 4.10%. That is probably the worst investment you can make for the next 30 years. Now, maybe for the next 3 months, you will still make some money. But even that, I doubt. I think that within the next 5 to 10 years, yields on government bonds in the U.S. will be significantly higher, and I emphasize significantly higher, maybe 2 to 3 times higher than they are at the present.
So, Marc, when we spoke to you, I believe at the end of September, you were holding 20% in equities, 10% in gold, the rest in Treasury bills. So has that changed? You're talking a lot about Treasuries this morning. Have you backed off that?
Well, basically, I'm very cash-rich, and I admit I have some equities. They haven't performed well, but luckily I don't have a lot of equities. And I'm still reasonably happy with gold, although I think that the gold price will also come down somewhat, simply because everything has been sold down and people still have some gains on gold. And as markets may recover between now and, say, next March somewhat, I think that the false sense of security will come back into the marketplace, and then people will not be that interested in gold.
Mark was just talking about that he is indeed looking for a global economic slump. But Mark, do you think there comes a level here where it starts to be priced in, or do you think that there is far more scope and far more downside in stocks as a result?
Well, I think it's quite clear that the market was extremely, and I have to repeat, extremely, or possibly the most oversold in the history of the market as of the end of last week. And so, like a tennis ball that drops to the floor, it rebounds, of course, and then it probably will drift lower. I'd like to remind you that the Nikkei was at 39,000 now close to 20 years ago, and it's now below 9,000. So it takes sometimes a long time to come back fully. But a move to 1,000 after having dropped from 1576 a year ago is most likely, I would say. And then the market may trade for a while between 1,000 and maybe 1,200 before then drifting again as the economy deteriorates badly.
Mark, just got a minute left here. Best way to make money, in your view, at this point?
I think the best way is to try not to lose any money. But I would stay diversified, and I would play it safe for the simple reason that everybody now assumes that the worst of the financial crisis is over. But that is far from being certain. And I think what has happened is that governments around the world have moved a step closer to going bankrupt themselves, including the U.S. government. And that, I guarantee you, the U.S. government will go bankrupt. It's only a question of time, sooner or later.
All right. Always a unique perspective and always good to get your thoughts. Mark, thank you so much for carving some time out for us. We appreciate it. Marc Faber, Managing Director of Marc Faber Limited and editor and publisher of the Gloom, Boom, and Doom Report.